Hello guys, how are you? This is your teacher Sir Haris Bhatt, accounting teacher, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we have come for the solution of the fourth question actually for 9706 AS Accounting, October-November 2024, variant 22, question number 4, which has come from marginal costing, and we have to prepare a marginal cost statement with some part of the contribution approach. So let's do it, and I'm very happy to solve this question in front of you. If I did some mistake, please forgive me because I don't have a mark scheme right now. It is not available. I just got the question for right now. So let's do it. The following budget information is available for the year ending 30th November 2024-25. Sales revenue is given 3,500 units with 542500. Direct material is given 87500. Direct labor 105,000. Production overheads, selling overheads, and profit for the year. Now, what is the difference of this question with other marginal costing questions? Let me make you clear first of all. This has come in the past also, May, June 17. It has come in the exams where we have been given semi-variable cost. So in this question, if you just see that direct material and direct labor are variable cost basically, but production overheads and selling overheads is going to be a semi-variable cost. It means that includes some part of variable costs, some element of fixed and variable, both are present in production overheads. In the same case, some part of fixed and variable overheads are included in the selling overheads also. And profit is already given in the question. So let's see, variable production overheads are budgeted to be $4 per unit. Always remember that variable cost per unit will not change with the change in the volume of production. Output, if output is changing, increasing or decreasing, variable cost per unit will remain the same. Same is the case, total fixed cost will not change with the change in the volume of production. So total fixed cost will remain the same. So variable production overhead are budgeted to be $4 per unit. If you multiply it with 3,500, you will get the variable production overhead. And then production overheads are given. So you need to subtract variable production overhead to get the fixed production overheads. Selling overheads include 5% sales commission. So it means that selling overheads has a part of sales commission, which is a variable cost. So 5% sales commission means that 5% of sales or 5% of the variable selling expense is going to be your sales commission. And all remaining selling expense are fixed. The other selling expense are going to be fixed. Okay. Now calculate the budgeted contribution per units. So in order to find the budgeted contribution per unit, you must be able to know that I should be having the selling price per unit. So let's calculate it, because contribution per unit is equal to selling price per unit minus variable cost per unit. Always remember that contribution per unit is equal to selling price per unit minus all variable cost per unit. All variable cost per unit, including both variable production or variable selling or variable output, right? So 542500 divided by 3,500, we will get the selling price, that is 155 per unit. Let's move forward because we have got the selling price per unit. Now I need to find the variable cost per unit, and the variable cost per unit includes first the direct material per unit. Let's calculate it. 87,500 is the direct material cost. Divided by 3,500, I will get 25 is the direct material per unit. Let's talk about the direct labor. That is 1,05,000 divided by 3,500. I will get the direct labor per unit, that is going to be 30 per unit. Now let's discuss about the variable production overhead and variable selling expense, because in order to find the contribution per unit, I need variable production overhead and variable selling expense so that I can subtract from the sale price to find the contribution per unit, which is the requirement of the question, that you need to find the contribution per unit. So production overheads includes both fixed and variable element. Variable production overheads are budgeted to be $4 per unit. It is given. So that's quite easy. That variable production overhead is $4 per unit. That's fine. Now let's talk about the variable selling expense per unit. Where selling overheads are given 157,500, and the question tells us that the selling overheads include 5% sales commission. It means that 5% of the selling price is going to be your variable selling expense, because variable selling expense per unit won't change per unit. Selling price is 155. So I will calculate 155 into 5 divided by 100. So the answer is going to be 7.75. That is the variable selling expense per unit. I can calculate it either ways, that 542500 multiplied by 5%, you will get the variable selling expense, that is 7.75. But that is not the right way. Why, sir? I will explain you. Always remember that when you are going to find the variable cost per unit, you need to go per unit basis. You need to use per unit basis. But if you want to go for fixed cost, you need to go in total, because total fixed cost does not change with the change in the volume of production, and per unit variable cost won't change. So you will find the selling price per unit, and then 5% of the selling price is going to be the variable selling expense, 7.75. Now we can find the contribution per unit. 155 minus 25 minus 30 minus 4 minus 7.75. You will get the amount of contribution per units. So I have calculated it already. 155 contribution is equal to selling price minus variable cost per unit. So 155 minus 25 minus 30 minus 4 minus 7.75. So 88.25 is the contribution per unit. Now the second part requires us to find the budgeted fixed overheads for the year. Let's calculate it. Do you think I have given any budgeted fixed overheads? No, it is not given. So it means that you have to elaborate, discriminate, differentiate the fixed cost from the variable, from the total cost. Production overhead is given 126,000, and out of this production overheads, $4 per unit is the variable production overhead. So I can calculate it easily. How come, sir? 3,500 into 4 is the variable production overhead. 3,500 into 4 is the per unit. That is 14,000. So I can calculate now 126,000 is the total production overhead minus 14,000. I will get the fixed production overhead, that is 112,000. So I found the fixed production overheads are going to be 1,12,000. How come I have calculated 3,500 into 4? That is the variable production overheads, 14,000. And then I have subtracted it from the total production overheads, and that is going to be 1,12,000. If you want to show it, I can show it in front of you. That is 14,000. It's not a part of the question, but just working. Now let's talk about the variable selling overheads, fixed selling overheads. Total selling overheads are given by 1,575,000. Variable selling expense per unit is 7.75. Let me calculate the total. 3,500 into 7.75 into 7.75, and the total is going to be 27,125. Now I'm subtracting it. 157,500 minus 27,125. I will get the fixed selling overheads, and that is 130,375. So I've calculated the fixed cost also, which is included in production overheads. That is 112,000, 112,000, and 130. That is fixed production overheads, and fixed selling overhead is 130,375. Let's go for the total of this to get the total fixed cost. That is 112,000 plus 130,375. Total fixed cost is 242,375. So I have calculated the contribution per unit, total fixed cost. Now the question is asking us to find the budgeted margin of safety in units. So margin of safety will be, the formula is budgeted units sold minus break-even units sold. Budgeted units sold is already given in the question, that is 3,500. Sir, how come? Let's see. The budgeted units sold is given in the question, that is 3,500 over here. Here it is. Minus break-even units sold, we can calculate it easily, because we know that break-even point or break-even units is equal to fixed cost, total fixed cost divided by contribution per unit. So total fixed cost we have calculated 242,375 divided by contribution per unit, that is 88.25. So 2747 units is going to be my break-even point in units. Now, margin of safety is 3,500 budgeted units sold minus break-even units sold, 2,747. So 753 is going to be my margin of safety in units. So margin of safety is good, but not very comfortable, because 753 units, if we can decrease, we are able to decrease our sales by 753 units before going into loss. So before going into loss, the sales can be decreased by 753 units. It is the point above break-even point, right? Now let's go on. Let's start the next part of the question, which is the difficult one also. Students believe that this was the most difficult question of the exam, and I accepted that this question is difficult. Even question 1 was also difficult. It was not considered to be an easy paper. But if you see that these questions have come in the past, yes, I can assure you, I told you May June 17, and I will give some idea of that particular also. Same is the case with bad debts. It has also come in 2016. You can see the chapter in complete record. You will find a part of bad debts over there. Not the full, but part of bad debts was also there. That's why I already always make you realize that go for the past papers in total. Last 10 years have to be. There is no other way out. Okay. Martin now feels that production and sales could be increased by 20% by improving the quality of product. So we are increasing the quality of product. How we can increase the quality of product? By improving the quality of material. So it means the material price will increase. And because of the increase in the material price, the labor cost should decrease. Why? Because there will be less wastage and less time will consume. So labor hours will decrease. And output has been increasing by 20% because we are increasing the output, because we believe that we are able to sell more units to increase our profit. So she plans to make the following changes. Purchase new machinery at a cost of 60,000. The machine will have an estimated useful life of 5 years and a residual value of 10,000 at the end of its lifetime. So it means that this machine needs to be depreciated also. So our depreciation cost will increase, which is going to be the fixed cost. So let's do it. First of all, the units sold with the changes actually. The units sold are going to be now 3,500, and there is an increase of 20% beta. So 3,500 into 20% is going to be 700. So now the units sold are going to be 3,500 plus 700. So we are going to sell 4,200 units. Okay, right? For this particular change. Because of this change, we are able to sell 4,200 units. Because of the new machinery, the depreciation, the fixed cost will increase. And we have to calculate the depreciation. 60,000 minus residual value, original cost minus scrap value divided by useful life. 60,000 minus 10,000 divided by 5 is the useful life. So let's calculate the depreciation cost, which is the fixed cost. Obviously, 60,000 minus 10,000 divided by 5. So that is going to be depreciation cost will increase by 10,000, which is a fixed cost. We have been given the fixed cost, and fixed cost in total will not change. That is 242375 plus 10,000. Now it is increased by 10,000. And in order to increase the sale, we have to go for some advertisement also. So we have to go for some advertisement also. So our advertisement cost will increase. Undertake an advertisement campaign at a cost of 1,250 per month. So it is per month actually. And I believe that the question has asked us to prepare the marginal cost statement with the changes annually on annual basis. So we are going to calculate advertisement cost annually, that is 1,250 per month multiplied by 12. We will get the amount of the annual advertisement cost. So let me calculate it. 1,250 into 12, that is 15,000. Which cost is going to be increased by 25,000 in total because of depreciation and advertisement. Let's move forward. Reduce the selling price by $6 per unit. So selling price is going to be decreased by 6 per unit. If you just see that the selling price was 155 minus 6. So now it is going to be 149 because the selling price has been decreased by $6 so that the sales volume can be increased by 20%. And because of the same reason, we have improved the quality and decreasing the selling price. Purchase high quality material as discussed, and that will increase the direct material cost by $3 per unit. So because of high quality material, the direct material price will increase by $3. So 25 plus 3 is going to be 28. So the direct material is going to be 28 now for these because of these high quality material and changes. Direct labor hours per unit will reduce by 5%. So direct labor price will reduce by 5%. Hours is not given actually in the question. Otherwise, I would have gone to calculate the hours per unit, right? But it is decreased by 5%. It means the direct labor price will decrease by, because price has not been changed, only the hours has changed. So the direct material cost will decrease by 5%. What is the direct material? Direct material is 25. What is the direct labor? That is 30. So 30 has been decreased by 5%. 5% of 30 is 1.5. So the direct labor price is now 28.5. Okay. So 28.5 is the direct labor per unit. Next, use of the new machinery will reduce the unit variable production overhead by 20%. Because of the new machinery, the variable production overheads will decrease by 20%. So variable production overheads will decrease by 20%. So what is the price of variable production overhead? That is 4. It is given in the question. So that will decrease by 20%. The 20% of 4 is basically, if let me calculate it, 4 into 0.2, that is 0.8, right? So 4 minus 0.8. So now the variable production overhead is going to be 3.2, right? So variable production overhead will decrease by 20%. Now it is going to be 3.2. Sales commission will remain at 5%, but commission on all units sold in excess of 3,500 will be paid at 10%. So sales commission will remain at 5% for 3,500 units, but above 3,500 units, which are 700 units, the sales commission which we have to pay is going to be 10% of the selling price. So that will increase to 10%. Now let's prepare the marginal cost statement. Sir, you didn't discuss about sales commission. I will discuss during solving of the question, so that you may not find it difficult. So we'll start for the first question with revenue. So 4,200 is now the unit sold, and the selling price is going to be 149. So let me calculate it. 4,200 into 149, 625,800. So the amount of sales is going to be 625,800. Okay, that's fine. Less variable cost. Less variable cost of sales, because you know that we used to subtract only the variable cost of sales from the revenue, and it includes obviously direct material. I am using the abbreviation, but you can't use. You have to write the full letter, full word actually. But I can use the abbreviation, the direct material, direct labor, and variable overheads. Let's talk about the direct material. Units sold are 4,200, and direct material per unit is now not 25, it is 28. So 4,200 into 28, I will get the amount of total direct material, that is 117,600. Now the direct labor is 4,200 units sold multiplied by direct labor per unit is over here. I have calculated 28.5 because it has been decreased with a certain 5%, 1.5, 4,200 into 28.5, that is 119,700, right? So why we are calculating in total? We can calculate through per unit also. Yes, possible. But the Gandhar has required us to prepare the margin cost statement. So when you are preparing a statement of profit and loss, then we have to record the amounts also in total. So variable overheads are going to be 3.2. So 4,200 is going to be the variable unit sold, and variable overhead per unit has been decreased by 20%. So that is 3.2. So 4,200 into 3.2, I will get 13,440. 13,440. Okay. Now let's talk about the sales commission. What should I write? I should write selling expense. Selling expense has two portions. Variable selling expense has two portions rather. Should I write variable also? That would be more appropriate. Okay. The variable selling expense is going to be the portion of our question that we have to go for a variable selling expense. So I use the word variable only, and now I'm going to go for it. So let's talk about the variable selling expense. For 3,500 units, the variable selling expense will remain 5%. Here you have done the mistake. And you might be thinking that this part has come first time in the paper. Again, it is wrong. It has come in the past papers, but unfortunately, your teachers hasn't done that question for you. This is the problem we are facing. Actually. This is the problem we are facing in accounting. And the students are leaving accounting because the reason they found it difficult, because they don't want to study, they don't want to work according to what according to what Cambridge is basically requiring from us. If you will do that, believe me, you don't need to get an A star. The A star won't be at 60%. It will definitely increase to 70, 80, 85%. But now in O levels, it is almost 50%, and in A levels, almost 60%, you will get an A. So 3,500 into 5% of uh, sales commission is going to be 5% of the selling price. Variable selling expense. Selling price is not, sir, 7.75 we will multiply. No. Why, sir? Because 7.75 is the variable selling expense when 5%, yes, 5%, when the selling price was 155. Now the selling price is 149. So you have to calculate the 5% of 149. So 149 into 0.05, it will become 7.45. So now for 3,500 units, the variable selling expense is going to be 7.45. So let me multiply it. 3,500 into 7.45. The answer is 26075. Let me write it down. 26075. Now, for 700 units, there is a change. For 700 units, the sales commission is going to be 10% of the selling price, but of the new selling price. So 149 multiplied by 10%, not 155. That is going to be 14.9, right? So 700 multiplied by 14.9, you will get the variable selling expense in total. And this was the point which has gone wrong in the paper. But if you will talk to me, 10430, if you will ask me, a good student can make that error. So I will deduct only 1 mark for it, and I will give all the marks if he has been able to solve the question correctly, the other part of the question. But if you believe that this point has never come in your past papers, then you are wrong. I can show it to you, and you can message me also on my number directly, 0333 471 2897. I will give you the same question, same type of question which has come in the paper. So let's go for the total of the variable cost. 117,600 plus 119,700 plus 13440 plus 26075 plus 10430. So 287,245. So 287,245 is the total. 287,245 is the total of the variable cost. So when I will subtract sales minus variable cost, I will get the contribution in total, right? Yes, variable selling expense has two portions. One for 3,500 units, 5% of the selling price, and for above 700 units, we need to calculate as 10% of the selling price. So 338,555 is going to be our contribution. Let me calculate it again. 625,800 minus 287,245. So 338,555. Now I will subtract less fixed cost. Total fixed cost I will subtract, and that is going to be obviously 242, which is available in the past, 375, because total fixed cost won't change. 242,375 will come again. We will not multiply the fixed cost per unit with the new units, which has been increased. No, total fixed cost won't change with the change in the volume of production, but there is a change of increase in the fixed cost. That is because of depreciation, and that is 10,000. And then that is because of advertisement, that is 15,000. So let me calculate it. 242,375 plus 10,000, 267,375. So this will become 267,375 is the fixed cost. And I will subtract the fixed cost to find the profit for the year. So I can find the profit easily now. So I have found the profit, which is the profit for the year. And this has been asked us to calculate actually in the question to find the 338,555 71180. Sorry, 71180 is the profit for the year. 338,555. Let me calculate it again for you. 338,555 minus 267,375. You will get the answer 711,87711. Just a minute. 71180. Okay. So this is how we have solved this question. And I believe that you have understood because I have taken much time to make you understand every single point. And inshallah ta'ala, we will discuss also about in which paper it has come. Now, the next part of the question, which is not available with me, but I'm telling you, it was that you need to decide that either we should go for this change or not. If you just see the profit in the past, what we were getting 66500. So profit has increased and from 66500 to 71180. So it is increased by 6,000. And also the sales volume has increased, market share has increased, right? So that will help us out, obviously. So we will go with the decision. And then the question is asked us that either we should go for adopting a marginal costing approach or absorption costing approach. This was the question. So absorption costing is a proper costing method, but marginal costing is basically used for decision making only. Marginal costing differentiates the variable cost with the fixed cost, and it uses contribution approach first and then subtract. In international accounting standard, absorption costing is basically the best method to be used, and it is also used for tax purposes and for inventory valuation. Marginal costing is not used for tax purpose and inventory valuation. It is used for decision making, right? Like for accepting a new order or for any particular decision, discontinuation of a product, make or buy decision. So we will adopt absorption costing. According to my view, absorption costing is more appropriate method because the question is not right in front of me. I have just have been told by my students that this question has come in the particular exam. So I have just given you an idea about that, about the theoretical portion, part of the question, which is of 7 marks. So thank you very much. Do subscribe my channel and feel free to ask any question and follow me on Insta and Facebook. And please do ask students to come and subscribe the channel so that they can get information out of it, which is free for all. Thank you very much. Take care. God bless you all.